All right, let's dive in. Today we're going to cut through all the noise in the market to figure out how you can make smarter, more informed investment decisions. It's all about looking past the stock price to find out what's really going on with a company.
Man, this quote just hits the nail on the head, doesn't it? That feeling of being totally overwhelmed by all the data, the charts, the constant chatter, it feels like you're lost, and you're just wondering, where do I even start?
And that's exactly it. The problem isn't that there's not enough information. It's that there's way too much. It's a total flood. So the real trick is turning all that chaos into clarity. And that's what we're going to do today, give you the tools to find what really matters.
Okay, so here's our game plan. We'll start by talking about how to navigate that big market forest. Then we'll get our compass, which is fundamental analysis. After that, we'll get our hands dirty gathering the clues, and then we'll learn how to decode a company's health. We'll check out some modern tools, and finally, bring it all together to go from data to a real decision. Let's do this.
All right, first up, let's get our bearings. It's so easy to get obsessed with a stock's price going up and down every single day. But that's like staring at one leaf and thinking you understand the whole tree. To really see the forest, we have to look way deeper.
So, what's our compass for this journey? Well, it's an incredibly powerful method called fundamental analysis. This is the tool that lets us ignore all that daily noise and find a company's true north, what it's really, truly worth.
At its heart, fundamental analysis is all about one thing: finding a stock's intrinsic value. Now, that's just a fancy term for what a business is actually worth, completely separate from its price on any given day. It's the difference between price and true value.
And this brings us to a super important distinction. You've probably heard of technical analysis. That's all about charts and patterns, trying to guess where the price is going next. But what we're focused on is fundamental analysis. We're not market psychics. We're detectives trying to figure out a business's real, long-term health.
So if we're going to be financial detectives, we need some clues, right? We need evidence. So where do we find the official, trustworthy information about a company's finances?
Your number one source, your ground zero, is the company's annual report, called the Form 10-K. It's filed with the SEC. And listen, this isn't some glossy marketing brochure. Thanks to a law called Sarbanes-Oxley, the CEO and the CFO have to personally sign off on it, swearing that it's accurate. This is the real deal.
Now, inside that 10K, you're going to find 3 absolutely crucial documents. Think of them as the 3 pillars of our whole investigation: the balance sheet, the income statement, and the cash flow statement. Together, these tell the complete financial story of a business.
First up is the balance sheet. The easiest way to think about this is like a financial photograph, a snapshot taken on one specific day. It's all built on a simple, elegant equation: assets equals liabilities plus shareholders' equity. Basically, what the company owns, what it owes, and what's left over for the owners. That's its foundation.
Okay, so if the balance sheet is a photo, the income statement is more like a video. It shows you the company's performance over a period of time, like a quarter or a whole year. It tells the story of how much money came in, how much went out for expenses, and what was left at the end, the profit or loss.
And finally, we have the cash flow statement. And this one is so important because, profit on paper isn't the same as actual cash in the bank. This statement follows the real money. It tells you if the company is actually generating enough cash to pay its bills and grow for the future. No cash, no company. It's that simple.
Okay, we've gathered our clues, the 3 big financial statements. But right now, they're just a big pile of numbers. Now comes the fun part. We have to analyze them to really understand the story they're telling us about the company's health. So how do we do that? We use a really powerful tool called financial ratios. These are just simple calculations that let us compare different numbers from the statements to each other. It's how we turn all that raw data into meaningful insights. Let's take a classic example, the debt-to-equity ratio. All this tells you is how much a company is relying on borrowing money to run its business. Is it standing on its own 2 feet, or is it propped up by a mountain of debt? A really high number here could be a major red flag.
But, it's not all about the numbers. We also need to look at what are called qualitative factors. And one of the most important ideas here is the economic moat. Just picture a castle with a huge moat around it protecting it from invaders. That's what a great company has, some kind of durable advantage that keeps competitors at bay. So where do these moats come from? Well, the folks at Morningstar identified 5 main sources. You've got things like intangible assets, think brand names or patents. There are high switching costs, where it's just a huge pain for customers to leave. There's the network effect. The more people use it, the better it gets. A cost advantage, or just dominating a small market.
Now, I know what you might be thinking. This sounds like a ton of work, right? And honestly, it used to be. You'd be sitting there for hours with a calculator. But today, we have some incredible high-tech gadgets that make this whole process way, way easier.
And there's truly a tool for every kind of investor. For long-term, fundamentals-focused people, a platform like Morningstar Investor is amazing for its deep analysis and moat ratings. If you're an active trader who needs info in seconds, something like Benzinga Pro is built for speed. And then you've got tools like Fininser that use AI to help you find insights fast. The key is just finding the right tool for your style.
Okay, let's bring it all home. Think about where we started, lost in a dense forest. But now we've got a compass, fundamental analysis, and we have a map, those financial statements. We actually have a framework for making a solid decision.
And it's so important to be clear about this. The point of all this detective work is not to get a crystal ball. Nobody, and I mean nobody, can perfectly predict what a stock is going to do tomorrow. That's just not the game we're playing.
The real goal is to shift from just guessing to actually investigating. It's about getting a deep understanding of a business's health and its competitive position right now so you can make a rational, evidence-based decision about its future. It's about swapping that anxiety for confidence.
So we've gone from being overwhelmed by data to having a clear, actionable framework. You literally have the map and the compass to navigate the market. So the only question left is, which company's story are you going to go out and uncover first?